This is our Thursday series. We do sessions on the first, second, and third Thursday of every month. The first Thursday of every month, we talk timing. The second Thursday of every month, we talk ETFs. And the third Thursday of every month, we try to show you different ways in which you can find the kind of ideas that you're looking for. Whatever that is, whether it's dividends, my colleague likes to do buy rights, whatever it is, you want to sell puts, you want to buy calls, you're just looking for something long-term, nice, easy, long-term portfolio thing, whatever it is, this is where we help you find those ideas. Typically, we go through the screener, and that's primarily where we start hunting for ideas. I think one of the best ways to take a large number of stocks and distill it down to a few selections that meet your criteria. The one downside to the screener, I mean, it's not a bad problem to have, is that it is, I call it surgical. That is, and I'll just use market cap as an example. If the company has a 2.01 market cap, it would show up if you use mid cap. And if it had a 1.99 billion market cap, it would not show up. The difference between those market caps is negligible, but one would show and one would not. And that's just it. Same thing with beta. You might want something that has a beta above 1. So if you choose between 1 and 2 on beta, you're going to get things with a beta of 1.01, nothing with a beta of 0.99. The difference between those betas, I would also say, is negligible. So I encourage people to tinker with the screener, to develop a screen that they like, but not be afraid to look at what's falling just outside of the parameters in which they're setting. I think that is going to help you hone in. And also, you might be surprised to find that you built a screen and then you tinker with it a little bit, and then you say, oh, you know what, I actually like this better. And that's great. And that means you've just improved upon your process, and it's more suitable for you. So I'll go through the screener briefly, generally just an overview. If you have any questions, please use the Zoom Q&A window. It's accessible at the bottom of your Zoom screen. Also, I should have said this at the top, we do record all of these and we will be archiving them, as always, in our members only section. So the screener starts up top with select starting universe. We default to the Russell 3000, but we give you a good list that you can look through. The Russell 3000, the S&P 500, the NASDAQ, which is 100 stocks, the Dow, which is made of 30. We give you growth and value stocks. We've noted, if you've been reading our morning insights, which I strongly encourage you to do, that the shift in the market has been from growth to value. So maybe you want to look at value stocks. Maybe you really only want a certain type of value stock, like large cap value or small cap value. We also have what we call weakest and strongest industries. The weakest and strongest industries are those industries in the top 20 or bottom 20% of our industry list. Go to the workspace, pull up our industry list. There are a lot of industries here, about 70, 80, which means the strongest industries are giving you the top 15 and the worst industries are giving you the bottom 15-ish. Again, it's by power bar, and depending on what is in the top or bottom 15 at that time could be quite a lot or quite a small universe. You will see that the top, let's just call it, what was that, 6? 10 and 4, 9 and 9, 2 and 10, 1 and 5, 1 and 7, 1 and 7. That's 58 stocks total in those top 6. Well, look right below it. Take your top 7 and you've got more than 80 stocks just in that one industry. Some industries are really, really small. We don't say, well, the top 15 industries only has 150 stocks in them, so let's expand it. It is what it is. If you have a lot of large industries in the top 15, you're going to get a lot more names than if you don't. Now, these industries are, again, by power bar ratio. And some of these industries you'll see are at the top because they have one bull and 0 bears. So their ratio is 1 bull, 0 bears, 1-0, right? 1 to 0 is a better ratio than 51 to 1. Even though the percentage of stocks in this industry are 12.5% bullish, 87.5% neutral, whereas this is like 60% bullish, right? And 30-some% neutral. It's simply done this way. I would encourage people, instead of using strongest and weakest industries, to focus on either finding out what the strongest sectors and subsectors are. And last week on the ETF session, we went over how you can identify the strongest and weakest ETFs. I'll go over that in a few minutes. Or select your industry. Just select an industry and search that industry. Right now, we don't let you select more than one industry. However, we do let you select, and I'm glad we recently made this change, more than one sector or subsector. So I can go into the subsectors list and pick off all the subsectors that I would like. And maybe at the moment, there's only 3 subsectors that are performing in the market. Maybe there are, well, there can't be 30. There's only 22 of them. Maybe there's 21 of them. The point is that it gives you more flexibility to decide what is outperforming, what is not, and what areas of the market you want to look for. And I think it's a better way to go about screening from a top-down approach. You also can select a user list. I think this is a great tool. You can import all kinds of things. So yesterday on a session, someone said, hey, can I screen ETFs? And I said, well, no, not today. But if you create that ETF as a user list, then the very next day you can screen it. So I can screen this particular ETF today because I plugged in all the constituents yesterday. I have a watch list. I can very easily screen what is bullish outperforming in my watch list. So I can build a watch list of 100 stocks that have been interesting to me over the past month. And then quick screen, done. Nice little watch list in front of me. All right, so that really is the starting universe. And that's going to determine, you know, what you get out of it. The wider you look, the wider net you cast, the more results you're likely to get. The narrower the funnel at the top, the less you're going to get at the bottom. And for some people, that's preferred. There's a little bit of, you have to know a little bit of what you're looking for and what you want. Next is the stock rating. And we give you the ability, and there's a lot of choices here. And what I'm hoping is that they take the time to turn this into the kind of usability that select a subsector has or select a sector has, where you can click things off. So you can say, oh, I want the neutrals, the neutral pluses, and the bulls, and just click them off. But what we give you is the ability to look for the very bullish, which is just the very bullish, the bullish, which is just the bullish, or the bullish or better, which is the bullish and very bullish, or bullish or lower, which is going to be bullish, neutral plus, neutral, neutral minus, bearish, and very bearish. Basically everything but the very bullish. I'm not sure what case you would use that in. I'd be interested to hear a case and where you think you want to look for anything that's bullish or less. I mean, I don't know why you would have the starting universe, but we give you the ability to do that. We do that for every rating. So you can do neutral plus, just neutral plus, or everything above or below neutral plus on our rating system, et cetera, et cetera, et cetera. Oops. All the way down to is very bearish. below is very bearish, we then start talking about changes in the rating. That is, did it turn bullish today or this week, or bearish today or this week? And then has what we call persistency, meaning has it been bullish a certain percentage of the time over the past few months? And to be honest, I got to look into what the look back period on has bullish persistency is. Below that, we have the individual factors. You can search on any one of our 20 factors, or you can search by the headline, just the financials, right? So you can search for the financials and then search for free cash flow. I encourage people not to start tinkering around in the factors. I'm gonna say that again. I strongly encourage people not to start digging around in the factors. Dan Russo's been pretty firm on this. I haven't seen any research that says that any one factor is a good timing factor, or that any one factor is helpful in picking a stock's forward performance. There's a reason there's 20 factors, that there's a reason they're weighted differently. And there's a reason we look at it as a summation of the 20 factors and not just, hey, free cash flow is bullish, great. There may be some very specific situations where you might want to look for a specific factor. Perhaps you want a high dividend company and you want to make sure that free cash flow is bullish. The one thing I will caution you on is our free cash flow is not an absolute value of free cash flow. That is, if company A has free cash flow of 20 million and company B has free cash flow of 19 million, does not mean that company A has a better free cash flow rating than company B. And the reason is because we look at free cash flow on a relative basis to other companies. So one could be good, one could be bad. Personally, I'll tell you the only factor I look at, the only one, and this gets back to my comments about strongest and weakest industries, is the very last factor on this entire list is industry relative strength. And that tells me if a industry overall is outperforming or underperforming the market. And I usually set it to bullish. And that's kind of how I limit things to just those that are in strong areas of the market, just the ones that are outperforming based on our factor. And I know a little bit about the factors that I feel comfortable using it. Again, I would not go in here and pick out your own set of 3 factors unless you have done some study that shows that these combination of 3 factors, give you some forward performance edge. Again, there's a reason there are 20 factors. Personally, I wouldn't mind if they just took this whole little factor section away. That might be what the young folk would consider to be a hot take, but I just want to stress that. Performance. I don't use this a whole lot, but you can definitely use this for it. We give you the ability to look at performance over various time frames. So you can look and see things that have been underperforming the market over, let's say, 3 months, but outperforming over 1 month. So maybe they are return versus SPY. You can only do return versus SPY once. So maybe the price return over 3 months is down 2%, but the return versus SPY over 1 month is up 2%. So we're outperforming the SPY over the last month, but over the past 3 months, we've been in a downtrend. I don't know if that would actually show anything. No. But you can start to slice and dice performance over different times and against the S&P. I think it'd be hard for it to be down 2% over 3 months, even though the S&P is up over the past 3 months by quite a bit. It doesn't really work in today's environment. But there are different ways to slice and dice performance. I don't do it a whole lot. I am not terribly concerned about the relative performance against the SPY over time, because I just use the relative strength indicator, which is down in the technical section, which we'll get to in a second. But if you're really concerned about certain price returns over time, there are ways in which you can look at different things, down 2% over 3 months and maybe up 5% over the past month. Still nothing. They're only, oh, I'm only looking at one stock, one sector, and that helps. There you go. 4 of those. I don't know if any of them are any good. Couldn't tell you. Because again, I don't mess with the performance a whole lot, but we do have some people who want to see certain metrics over time. One of the things I do actually like for the performance section is the 52-week high, the at near or at low. At near high, at near low. So what in the S&P 500 is rated bullish and is at near a high? 23 stocks. What about those that are at or near a low? If you like taking bearish ideas, oh, they won't be bullish. Whoops. They'll be bearish or lower. There you go. That would be where I start looking for bearish ideas. Beneath that, we get into our technicals. The technicals are the stuff that are at the bottom of the screen and go along the price chart. We give you 2 price levels to look at these, to look at some of these technicals. Those would be the overbought, oversold, our trend line. So you can look for things that are above a rising trend line or below a falling trend line. That would be price above the rising trend. So the trend line is rising and price is trading above it. That'd be a nice strong uptrend, or below a falling trend line, price is in downtrend, price is falling below it. Near the bands, which I don't look at a whole lot, but some people like to see things when they're at the extremes of the bands. Above or below the EMA 21, which is our middle dotted line. So maybe you like to buy stocks when they're oversold and below their EMA 21 while they're at near a high. Nothing comes up. There are 8 that are oversold. None of them are below their 21 EMA. But we give you the ability to go through these. Maybe they crossed over today. Let's see if any crossed over today. None. They're all trading in nice, strong trends above a rising trend line is my guess. You can also look at crossed over or under the long-term trend today. See things which are changing over from one to another. So that's price level. You can combine those price levels, I'm going to leave the oversold on there, with money flow. Money flow can be very strong, strong, weak, or very weak, and that means today's reading. If you want to look at money flow over time, then you would want to look at persistencies. 1 month, 3 month, or 6 month persistencies are going to identify money flow that has been more bullish than bearish, or more bearish than bullish over those different time frames. All right, so we could just look for, maybe we don't care if it's oversold, maybe it's got a little bit of red money flow today. And so that would show up as weak money flow today. But maybe for 2 of the last 3 months, it's been absolutely strong. That would be a 3-month high persistency. It's possible to have weak money flow today and a 3-month or 1 month or 6-month high persistency of money flow. Relative strength is our relative strength indicator at the bottom. Along with the power gauge rating, it's, I don't know why you would ever screen without selecting a relative strength indication. I can't really think of a good reason why you wouldn't pick something out from this particular field. Strong, again, same thing as money flow. Very strong and strong mean today, weak and very weak, and then you can pick out persistencies. Typically for this one, whereas money flow can be volatile. It's a short look back period, only over the past 21 days. It moves from positive to negative quite often. Relative strength shouldn't really do that. Once it flips, it tends to flip. So I usually use strong. Strong will include the very strong. Relative volume is a measure of average volume over a short time frame to average volume over a long time frame. I'm giving you some honest, again, hot takes. I don't think the relative volume is very useful to you. I think it is seasonal. That is, a lot of stocks volume drops over the summertime. So come September, the relative volume for a lot of stocks looks heavy. Why? Because in September, the volume picked up, and over the previous couple of months, the volume was low. Seasonal. Has nothing to do with that stock's actual volume in that time. Now, what would be interesting is if you're in the middle of July and you have heavy relative volume, that might be interesting, right? Or you're in the middle of October and you're very light relative volume. That might be interesting. But I don't think that sways in volume are high probability characteristics to help give you an edge. Minimum and maximum price are exactly as they sound. So you can set if you really want to just look at stocks over $200, you can set a minimum price of $200. And these are the breakdowns in numbers, they're the same for both. All right, so you can set a min and no max. You can set a maximum and no minimum. Maybe you want everything 200 and under, so you just set the max to 200 and set no minimum. Maybe you want it between 10 and maybe you don't want things that are below 10, so that's your range. I have a colleague who loves to do buy rights. He loves to do buy rights somewhere in the like $20 to $50 range. So what he does is he sets this really a little bit wider than that. He sets it 10 to 75. Again, it's surgical. So when he says I like it in the $20 to $50 range, 51, although technically outside of his range, is not necessarily outside of what he's willing to buy. Look at that. Quick little screen. Intel Corp. It's an S&P 500 company that's bullish or better. It's at or near its high. It's currently oversold. It's got really good 3-month high persistency of money flow. It's strong, meets our price range. I've just taken 497 stocks down to 1. Below that, we get into fundamentals. This is market cap stuff. You get large, mid, small, and micro. And then we give you the ability to look at certain combinations. So either small and mid or mid and large. Dividend yields. So you can have a positive yield, which is just anything that's above 0, or certain percentages. If you really just want high yielders, we can go look at everything over a 5% yield. Below that is earnings date. Some people like to trade earnings. Some people like to avoid trading earnings. So we give you the ability to look for earnings that are within or ahead of today's date. So are they next week? Were they last week? Or are they in the next 2 months or in the next month? I'll tell you, we are leaving big earnings season, so there's not going to be much within the next month. When you get to the end of December or early January and you click within next month, you're going to get a lot. Again, there's some seasonality to this, but it's specifically for earnings. Some people want to avoid earnings. Some people really want to have earnings. Beta is a measure of a stock's volatility. Basically, how much does a stock move as a ratio to the S&P 500? As if the S&P 500 is up 10% and you have a beta of 1 on average, it's an average. So don't send me an email tomorrow saying, Josh, the stock has a beta of 1, the S&P was up 1% and my stock was down 0.5%. Why? What's going on? Is beta lying to me? It's an average. It's not going to work out every single day, but on average, it tells us whether something trades with the S&P, that'd be a beta of 1. Faster than the S&P, that would be a beta above 1. Or slower than the S&P, which would be a beta below 1. If you have a beta of 0.5, that means on average, if the S&P is up 10%, your stock is going to be up 5%. And you might think, well, why would I want my stock to be only up 5% if the S&P is up 10? Well, beta is a non-directional measure. That means if the S&P is down 30%, your stock, again, on average, would only be down 15%. Low beta. High beta, above 2, suggests it moves twice as fast or more than the S&P. S&P up 10, your stock on average would be up 20. But then think about that down move. So they tend to be more volatile stocks. We also give you the ability to look through signals. So if you have a particular signal that you like because you've looked through the calculations for the signals and you think that matches your style and risk tolerance and what you're trying to achieve, if you've done that work to identify the signals that are appropriate for you, then go ahead, pick a signal and pick out a time frame. I don't look at a whole lot of signals. One of the ones I like happens to be the relative strength breakout and breakdown because I think it helps me find stocks that are going through what we call character or personality changes, bullish to bearish or vice versa. So that's a quick run through of the screener. If you do not want to have to put in your own screens, one of the things we've done for you is we've created what we call starter screens. Click on this icon. And it gives you the ability to pick out starter screens. We've got a bunch of starter screens. Let me talk about these real quick. They come in pairs, classic bull and classic bear. These are basically, stocks that have persistency of money flow and relative strength and are above a rising trend line that are rated bullish, or vice versa for bears. We do it on the S&P 500. You may say, hey, I like classic. We call them starter screens for a reason, and not pre-canned screens or turnkey operation screens or completely done for you screening, don't need to do anything else screens. They're starter screens. So they're built to be used right out of the box, ready to go. They're your S&P 500 classic bulls, or at least, most of them. Again, you may want to say, well, I want more than that. Or maybe I only want the large cap value ones. Maybe you've identified an area of the market. You want things that are in the industrial sector. Starter screens. Starter. We have not just for the bulls, classic bulls and bears, but also swing trades. The swing trading ones don't require the same degree of persistencies. And they're broader. We looked broader for these. We also gave them a beta. All right, beta down here, you'll see we look for relative strength that's very strong, but a lower persistency. Also, this one has oversold in it, whereas the starter screen for bull and classic bear do not. Because what makes a classic bull or bear is it's regardless of whether it's overbought or oversold. Overbought or oversold is not a factor in whether or not something's what we call a classic bull or bear. It's more for timing. But if you're looking to swing trade, this is a great little starter screen. And then lastly, bull and bear personality changes, which are just as they say, and dividends. Dividends. Now, I will note, I'm going to go into the bull personality change because I just talked like 10 minutes ago how you shouldn't be digging into the factors, and the bull personality change you see has a factor here. I will tell you, the bull personality change, all of these screeners were developed by Dan Russo, our team, with help from Mark Chaikin. Dan Russo is a chartered market technician. He's a technical expert. Mark invents indicators. They dug into these. They are experts. And so they went to find the best way to identify these personality changes because we got a lot of requests on how to find them. So we built this in. And then last is just a quick little dividend screen. Now, suppose you really like the classic bull, but you don't want it to be 6-month high persistency. So you said, that's a good start, but you know what? I found that it's not quite as many as I would like. I would like 3-month high persistencies. And you know what? I want them to be oversold. Ah, great. All right. Now, I don't want to have to do this every single time. So I'm going to go up where it says screen 1 all the way to the top here. I'm going to click on screen 1. Now it gives me the ability to overwrite this, and I'm going to call it Classic Bulls Oversold. And I'm going to hit enter on my keyboard. Enter on my key. I'm not going to click the save button. I'm going to hit enter on my keyboard. It now shows up in blue over here. I can then go back to this button where I found the starter screens, and I have my own saved screens. And you can see right there, Classic Bulls Oversold. So I don't even have to go into the starter screens now. I can go right to the screen that I built off of the starter screen that I like for me. All right, and you'll see I have all kinds of saved screens in here. Some of them are me tinkering around. Some of them were things that Sandy's or Dan has used it in the past that I just haven't cleaned up. The only ones that I really use out of my saved screens are my bull and bear swing trade screens. I realize that's it. Those are the only saved screens that I really go to religiously. Anyway, that's the screener. I went through the ETF screener last week, so I'd encourage people to go watch that. I'm not going to go through it, but generally speaking, it follows the same breakdown. You pick a starting universe, you pick a rating, don't mess with the factors. If you like performance, great. If not, okay. Same technicals, because it's right off the charts. And instead of stock characteristics, it's ETF characteristics down at the bottom here. I will do one quick thing, which is some people really want to identify just the best, let's say, sectors or subsectors. So under US equity ETFs, click the second one down, and you can choose our subsectors as your screen. There are 22 of them. I want all the bullish subsectors that have positive relative strength and are above a rising trend line. Let's give it some good money flow too. Why not? 3-month high persistency. Ooh, I got none. All right, let's get rid of the 3-month high persistency. I got 4, including the SPY. Huh. All right, well, those are my strongest areas. So I write down on my little sticky pad, KBE, XHS, and XSD. Scribble those 3 down. Those are the subsectors that came up on my screen that are strong and above a rising trend line and are also bullishly rated. I can broaden this if I want, just for purposes of examples, just gonna run with this. XSD, XHS at KBE. I go back over to the stock screener, and now I go to subsectors. KBE was one of them. XHS was one of them. XHD was one of them. Maybe not, maybe it was XSD. This is why you write them down. But now I've got whatever the 3 are here, and what screen is this? Classic Bulls. Let's go back to Classic Bulls. Don't save. Anyway, you plug them in, you select your subsectors, you plug them in. What do you think is the good ones? From the screen that you ran on the ETFs for subsectors, and then you just 2 banks come out of those 3 subsectors that meet the classic bull screen. So there you go. All right, let's get to the questions before we call it a day. Using ABB as an example, ABV. Looking at a 5-year chart, how can you screen for a change in direction in the long-term trend as a possible entry point or find exits on the long-term trend? Well, why don't ABB. So for one, I don't like using moving averages as a simple entry exit line. Right? This is kind of backwards, but it can work this way also, which is to say, if I were shorting this and I use the long-term trend line as simply my entry exit point, I would be exiting my short here and re-entering my short here, and then exiting my short here, and then re-entering my short here, and then maybe I exit it here, but re-enter it there, but exit there, but then re-enter here, and then re-enter here, or exit there. I don't know. I wouldn't be doing all that dancing around, and I don't know if it's that great of an idea, a way to go about it. So I wouldn't use the long trend line as an entry exit point. But if you think there's value in that, then go ahead. What you're looking for, I think, is to understand when this is happening. Right? Normally these trends happen to change around points where the relative strength changes, and you see them trade generally below, and I don't mean absolutely below, but generally below to generally above. So you want to be able to catch those changes. I would use the bull personality change screen, or I would go sifting through the relative strength breakout, breakdown signals. Let's see if this one had one. All right. Sometimes they do, sometimes they don't. For at a long-term investment, I mean, you have to define long-term investment. So what's long? I mean, you want to be able to catch the turn here, right? Well, look what the relative strength drops terribly. And then as it comes back around, the relative strength turns up terribly and it crosses over this trend line. I mean, if you're holding it through this, I mean, that's a long-term investment. You're back to where you were in October of 2017. Which is why we tell people to try to avoid these negative relative strength areas, because it's just an opportunity cost burn. Again, if you're looking for the big turn and trying to find these turns, then I would start tinkering through the bull personality change starter screens. It's on the S&P 500. Maybe you want to look at it on the Russell 3000. There's a lot of them on the Russell 3. Let's see what we have on the S&P 500. All right, there's a bunch of them. And maybe you don't even want the bullish or betters. You're willing to catch them when they're neutral. All right, so neutral or better. A couple more come on. Is there any sort for using a PEG ratio? PEG ratio would be price to earnings growth. I mean, in our financials, we have return on equity. We don't really have a PEG in here. Plus, if we had a PEG in here, it would be based on a relative market function, so it wouldn't be an absolute. So, no. But again, one factor is not very good for timing or predictive on a large basis. That's why there are 20. So maybe you have a reason. Maybe you run a fund and you can only use PEG ratios of a certain number. Unfortunately, we don't have that. What I would do, JL, here's what I would do. If you're looking for a very specific PEG ratio, then I would go search somewhere else and get all the stocks that meet the PEG ratio that you like, and then import that list, right? I like trading options for stocks that have weekly expirations. So I just imported a list of stocks that have weekly expirations. I went to the CBOE and did that. You know, if I wanted to search a specific ETF, you can do that. I import lists regularly. And so if you have a specific thing that you're looking for, like a PEG ratio, go run a Google Finance search or Yahoo Finance, or I'm not sure where else you would find, maybe your broker has it. I think I can do that with my Fidelity account, although I've never been inclined to try. Export that list from wherever you're getting it, put it into a spreadsheet, and then import it. And then the following day, you can start screening on it. Any other questions? All right. Well, we did a thorough review of this screener. I hope this was helpful to everybody. If you do think of a question after we're done here, please don't ever hesitate to reach out to us. You can reach us at info@chaikinanalytics.com, or simply go right to this little question mark icon, contact a specialist. It goes right to our inbox. Our whole team's eyeing it like a hawk. We'll get back to you as soon as we can. Sometimes we're more busy than others. Apologies in advance if we don't get back to you immediately, but we will get back to you as soon as possible. Thank you all for attending. I'm glad you like that idea, JL. I do it all the time. There are some very specific things that I'm looking for that aren't in our platform. So I just import a huge list that meets that one specific thing and then run it through our screener to get it down to meeting all the things that I like, right? Because it already comes in with that one specific thing. Hope everybody enjoyed. Thank you all for attending. No more sessions this week for the Thursdays. Next Thursday is the fourth Thursday, so we wouldn't hold one anyway. It's also Thanksgiving. So a happy holiday to everybody, and we'll see you again in December.